basically, since we're at the beginning of tax season, I thought it would be a good time to share some tax tips for everybody. I know certainly for accountants, this is the beginning of a stressful period, and also for small business owners, solopreneurs, etc. And I totally get that. So hopefully, I will help you guys and myself to de-stress a little bit by going through some of these tax tips today. All right, so let us get started. First of all, thank you again for joining and for being here. And in case you can't stay till the end, or this will be available as a replay on my YouTube channel, so you can watch it pretty much anytime. And so the webinar will really be, I have some slides to go through. It'll be approximately 35 minutes, I think. And after that, I've already received a few questions from you, and you can put some questions in the chat, and I will try and answer them to the best of my ability. And a little about me. So for those of you who don't know me, my name is Veronica Canna. I am a CPA, a CFA, and the founder of Montreal Financial. I started my career, I moved to Bermuda for a few years. I worked for some multinational companies there. I moved back to Montreal. I worked for another large company here, and then I just decided that I wanted to sort of start my own small business and deal with small businesses. I became an accountant for small businesses, which is very different from being an accountant for larger organizations. But I learned over the years. I started blogging. I started taking on clients, and it was a very interesting time. And over the past couple of years, I've started transitioning to providing more educational services to small businesses. So some of you might know I've written some books. I currently have 5 books for small business owners on taxes and dividends and how to start your business. I also have a blog. I do, some YouTube tutorials, and I also provide consulting services. And I have created my first ever course, which is exciting. So really, I'm, as much as I can say this, I'm passionate really about helping small businesses sort of understand their finances, take control of it. It's a common refrain that I hear from people that they're not very good with numbers. But I think most of us, especially those of us with small businesses, can be good with numbers. And so I'm just constantly striving to help people like you, sort of just be better to the extent possible, and know that a lot of it is instinctive, is just putting a vocabulary around it. Okay, so let us take a look at the agenda for today. So we are going to look at, first of all, so we're going to look at how to prepare your business finances for tax season. Some key tax deadlines that you need to know for 2025, very important. Everyone's favorite topic, expenses. You can essentially claim deductible expenses, and that can help you reduce your taxes. Some tips for those of you who are registered for sales tax, some tips for your GST, HST, and if you're in Quebec, your QST filings. I'm just going to talk briefly about my new course, just to see if it's helpful for you. It might be, it might not be, whatever, that's totally fine. And then after that, I will answer some questions, and we will have a real-time Q&A session. Hopefully you guys can hear me. Hopefully the tech is working. I really have no idea. So, you can let me know in the chat if everything sounds good. And I guess let's begin. Okay, so first of all, we are going to look at how to prepare your business finances for tax season. And first of all, and this may be a little obvious, but you want to get your records in order. And some of you may have been doing it during the year. Some of you are using accounting software or spreadsheets, and that's amazing if you've been doing that. But if you haven't, and a lot of people save it, to year end or early in the year, and that's totally fine. But this is the point at which, and I recommend that you start this as soon as possible, is to start to gather all of your documentation. And in terms of documentation, you want to have your income, which are your sales invoices, anything that's relating to that payments, etc. And then you want to keep your bills, your receipts, and everything relating essentially to your income and expenses. Ideally, so you have two options, and you can use both. You keep them on an accounting folder on your computer, so there, no matter what, there are things that you are going to have that are just available online, and so you can save them, create an accounting folder. And my recommendation for that is, look, everyone is a little different with how they like to see things organized. But my recommendation for that is to, title it accounting folder, tax folder, whatever, and then have all of your documentation by year. So set up a year, and then so for 2024, you would save all of the documentation, and then you can have subfolders called invoices or sales, and then expenses. And then by month, by date, alphabetically. From there, you have some flexibility in terms of how you like to see things. Next thing, and this is just sort of a general tip for some of you. And before I say this, I just want to make a note that most of the tips I'm giving you are for sole proprietorships and corporations. So unincorporated versus incorporated. Where there's a difference, I will make that clear. But I think all of these tips are useful for owner managed as well as corporations and sole proprietorships. So you want to separate your personal and business. Generally, if you're a corporation, you've already set up a business bank account, so that's great. But if you're a sole proprietorship, a lot of people simply just use their personal bank accounts. And I think this is a mistake. I think everybody needs to have a separate business bank account because, well, first of all, if you're ever audited, you don't want to give them all of your personal data because then that becomes difficult. They start to query it. And there can be a lot of confusion, and CRA does not like confusion. But also for yourself, because it's sort of a rudimentary accounting system. You can look at the balance in your bank account and kind of see how you're doing. And you should also have a separate credit card for your business. And that way, everything is maintained. And perhaps most importantly, you won't forget your income, your expenses, things that you can claim because they're all in one of these two accounts. You're not scrambling at the end of the year to go through different accounts to do this. Next, it's important to reconcile your accounts. And so, and what this means is you want to make sure that you capture all of the information, all of your expenses, all of your sales from your bank statements, from your credit card statements, and reflect them. And that takes us to our next point. So you have two choices where it comes to your accounting, really. One, you can use a spreadsheet, and spreadsheets are relatively easy. You can use Excel, or you can use, Google Sheets, which is free. There's tons of tutorials online on how to set up spreadsheets for your business. And I'll give you some tips at the end of this webinar. But so I highly recommend, at the very least, having a spreadsheet. If your business is a little more complicated, an accounting software is a really good idea. I usually recommend QuickBooks Online or Xero. Both are good accounting softwares. And they're relatively easy to use, also lots of resources online. And the thing with accounting software is that while there's a cost associated with it, it can save you a ton of time. So you almost have to determine what is an hour of your time worth, right? And how much are you saving in terms of time? And is it worth getting that accounting software? You also have history, and there's really an endless number of things you can do with accounting software, from invoicing to reporting to profit and loss statements analysis, all of that. And finally, in terms of preparing your business finances for taxes for your tax season, you want to start thinking about how you are going to do your tax return this year. So again, you have a couple of choices. You can either do it yourself, and there's all kinds of accounting tax software that is available out there. My preference is UFile, but a lot of people use TurboTax. That's totally fine. Some people use Simple Tax. Whatever you're comfortable with. And the thing about most of these accounting software is they're free to try. You can do your entire tax return without paying for it. It's only when you have to print or file it that you have to pay for it. So you can see if you're comfortable doing it on your own. And for people who have simple situations or who feel confident they can do it on their own, I highly recommend that, because it's a great way to kind of take control of your finances, right? To understand, and nobody understands your business better than you do. But alternatively, I totally understand a lot of you are not that comfortable doing it on your own. So in that case, this is it. In case you don't already have an accountant, this is the time to start looking. You do not want to leave it any longer, because accountants tend to get very, very busy at this time of year. So talk to a few accountants, find someone who's the best fit for you. There's the accounting services, the H&R blocks and all of that, which is fine. But there's, little to be, it depends. It depends on the complexity of your situation, but you're not going to have any kind of interaction with an accountant with a general service. Okay, so let us take a look at some deadlines for the year. And okay, so in 2025, your first deadline, if you only have a personal tax return, it's April 30th, 2025. And this is for people with T4s and essentially anybody who does not have self-employed income. And by self-employed income, I mean anyone who has a sole proprietorship or a partnership, i.e. someone who is unincorporated, who reports their income on the T2125 of their tax return. If that is your case, if that is your situation for you or your spouse, then you actually have till June 16th this year. It's usually June 15th, but it's a Sunday, so it's extended to June 16th. But keep in mind, payment is due by April 30th. And that means after April 30th, they start to charge interest. So you can just always send an estimate, because interest and penalties are charged on the balance that you owe. So if you don't owe anything, there will be no interest and penalties, or the less that you owe, the less interest and penalties. Corporate income taxes are due 6 months after year end. Your GST, HST, QST, if you're unincorporated, is also due on June 16th, but also the payment is due by April 30th. If you're a corporation, your GST, HST depends on your year end and the end of the period for your GST and HST, which may be different from your year end. So just make sure you know what that date is, and then it is due within 3 months if you have an annual filing after that year end. If you have a quarterly filing, if you've been doing it probably already, it is due 1 month after the period end. And keep in mind, there are interest and penalties that apply if you do not submit these returns by the deadline. So it is really, really important to do that. if you can. If you cannot submit the return, at least send an installment payment, estimating for what, again, for the amount that you owe, because as mentioned, interest and penalties are based on the balance owing. So if you pay that down, then your interest and penalties will be much lower. And interest and penalties are just a huge waste. So I really, you want to do everything you can to avoid having to pay those. And finally, the final deadline for 2025 is relates to RRSP contributions. And so this means that you can contribute to your RSP for 2024 and have it count as a deduction from your 2024 income up to March 3rd, 2025, because there's a weekend. It's usually the end of February, March 1st, but it's March 3rd this year. So again, I highly recommend that everyone who can contribute at least a little bit, set up an RSP if you don't already have one, contribute as much as you can, because it reduces your taxes payable. So it's a great deduction available to Canadians. Okay, so our next slide is about tax deductible expenses. So I've broken this down up into two slides. And the first one, I've just listed some common expenses that everybody, who has them can deduct. And then in the second one, we are just going to talk about more expenses that are a little more complex, like home office, etc. Okay, so first of all, my general comment for expenses, twofold. One, generally speaking, if the expense that you incur relates to your business, you can deduct it, with a couple of specific exceptions. One of the ones that comes to mind is clothing. You cannot deduct clothing expenses unless it is a uniform. It doesn't matter if it's a suit or something that you wear to work, or you only wear it to work. If you can use it for another purpose other than work, it is not deductible. But other than that, again, if your expenses relate to business, they are often generally deductible. Second of all, be reasonable with your expenses. And this is a really important tip. When CRA looks at your tax return and they look at your expenses, red flags are raised when a certain expense category is very high. And that's not to say that you shouldn't deduct anything that you're entitled to, but there are some gray areas, some softer expenses. So you just want to make sure that you are careful and you have all of the receipts for your expenses, all of the backup for your expenses. So some things that you can deduct: professional development courses. There's a question about this, so I'll address this at the end. Marketing and advertising. So this is one that, some people sometimes overlook. They might have a website for their business. So all of, the web hosting that you pay, the domain costs, etc., are deductible. Ads, promotional materials. I have Canva below. So many of us use Canva. That is, if you use it and you pay for it, that is deductible as a marketing and advertising expense, or it could also be under software and subscriptions. It's not necessarily black or white, the category in which it goes. Another often overlooked expense are bank fees and interest on business loans. Bank fees particularly, and this is another reason you should have a separate business bank account, is because you can deduct the fees on that business bank account because it relates to your business. So in fact, it costs you less because you are actually getting a deduction from your taxes for those bank fees. And if you've taken out a loan for your business, and the interest is also deductible. Software and subscriptions. All of us have many software and subscriptions that we use. I use Google Drive, Dropbox, QuickBooks Online, tax software. There's all kinds of subscriptions that I have that relate specifically to my business and that I need for my business. So those are deductible. You want to track those. And again, ideally pay for these on your business credit card. Salary, subcontractors, business insurance, these are all direct business expenses. Travel expenses, you have your transportation, your accommodation. If you are traveling specifically for work, if there is a leisure component, then you should prorate the travel expenses. So if you're going, for 3 days out of 10 and 3 days are personal, then you deduct 70% of your travel expenses. And meals and entertainment, a couple of notes. First of all, only 50% of these are deductible. And second of all, but on your tax return, if you're using tax software, you put 100%. Don't put 50% because the tax software will automatically calculate that for you. And second of all, for meals and entertainment, you have to be discussing you have to have a business purpose for the meals and entertainment. So maybe you're meeting with a customer or supplier or your accountant or bank manager, etc. That's when it's deductible. Generally speaking, not if you're just going for a coffee and working in a cafe. Okay, so let's look at tax deductible expenses, number 2. So here, these are 3 kind of special categories, and I've separated them because they are kind of separately listed on the T2125, which is the tax return for sole proprietorships and unincorporated businesses. So for home office expenses, if you work from your home and you don't have another office, you can deduct your home office expenses. You should delineate a portion of your home that is exclusively for your office. That's what I recommend. It could be in a whole other room, or it could just be half a room. You take the square footage of that space divided by your total home. That is your percentage that you can deduct. And then you can deduct rent or mortgage interest, utilities, property taxes, etc. Internet and telephone are a little different. You would apply a different percentage that is based on personal versus business use. So if you use your internet like 50% of the time for business, then you would take 50% of the expense. Same for telephone expenses. Vehicle expenses work a little differently for sole proprietorships versus corporations. If you're a sole proprietorship, you have to track all of your vehicle expenses. So gas and repairs and insurance, registration, all of that. You should have a spreadsheet to do that. And you also have to track the business kilometers during the year. Divide that by the total kilometers that you drove during the year to get a percentage. You apply that percentage, and that is what you can essentially deduct if you're a sole proprietor. If you are a corporation, it's a little different. You can actually take a per kilometer rate, which is just changed, is approximately 70 cents per kilometer. That's it, no other expenses. Or you can have the corporation purchase the car. That gets a little complicated. There's some taxable benefits. That's really only worth it if you're using your vehicle, probably around 70% for business, certainly no less than 50%. Otherwise, you're paying way more in taxes because there's a taxable benefit associated with that. And finally, you have capital cost allowance. And what capital cost allowance means is that these expenses, so these are high value expenses like a computer or printer, furniture for your office, your home office, or whatever. And you cannot take the full deduction. You cannot expense it all in 1 year. Instead, you have to depreciate it. And Revenue Canada has very specific rates depending on what class it belongs to. But you should certainly track these, and perhaps in a separate spreadsheet, separate tab in your spreadsheet or in your accounting software. It's actually on your balance sheet. And so you would calculate the depreciation. It's not hard to do, again, on the T2125 if you're a sole proprietorship. If you're a corporation, it goes on a separate schedule, and that the CCA, or capital cost allowance, is automatically deducted. Okay, so let's look at some GST, HST, and QST tips. And so for some of you who are you may already be registered, or you may be thinking about registering. It is a new year, and so some of you may have hit the threshold. And the threshold essentially is the point at which you have to register mandatorily is once you get to $30,000 of sales over a 4-quarter period. So that means, and a lot of you think of it as in terms of a year, but you actually have to look at it at the last 4 quarters, add them up, and then you determine what, if you have exceeded 30,000, that's when you will register for GST, HST. You can also register voluntarily, and this is really useful, especially for startups who have high expenses in the early stages of their business and lower sales. And the reason this is a good thing to do is because you can claim back the sales taxes that you pay on your expenses. And so for some of you, you actually get a refund. So if you have high expenses, say you have to buy equipment or computers or furniture for your business early on, you can claim back the sales taxes. So this is and there's no restriction about registering. You can register on day one. It also makes administration a little bit easier. If you know that you will exceed 30,000 at some point, then it totally makes sense to go ahead and register for sales tax right away. So once you're registered for sales tax, and if you're already registered, you want to make sure that you track your GST, HST on sales as well as your expenses. This is really, really important. And so again, as mentioned, you can use an accounting software. You can use a spreadsheet to do this. Accounting software makes it really easy to do because you simply have to put in a code. But in terms of a spreadsheet, it is also not that difficult to do. You can just set it up and you make sure that you record the GST that you have collected on your sales and the GST that you pay on your expenses. And the way that the return works is that you essentially offset. So you have the amounts that you collected, you deduct the amounts that you pay in your expenses, and the difference is what you remit to Revenue Canada. If you've paid more in your expenses, then you actually get a refund from Revenue Canada. There was also the quick method. I just posted a video about this on my YouTube channel that you can take a look at. But essentially, the quick method is a slightly different way of calculating. You still collect the GST at the same rates, the same provincial rates that you would use as above. But when you're remitting to the government essentially says for service-based businesses that if you you can actually remit at a lower rate. And so that means, so I'll give you an example. So you have you're collecting 5% of GST on your sales. The government only requires you to remit 3.6% of that 5%. However, the caveat is that you cannot claim the ITCs, which is the taxes that you pay on expenses. But if for a lot of you, especially service-based businesses, if your expenses are very low, then this is a great way to actually save some money and also save some time because you don't have to track the GST, HST that you pay on your expenses. And all of this applies to QST as well if your business is registered in Quebec. So in terms of common mistakes, I also have a video about this on my YouTube channel, but it's really, really important to track your, first of all, your input tax credits, make sure the amounts are correct. You want to make sure that you are charging the correct rate. And the correct rate is based on the location of the customer, the province in which the customer is located in. So if you are located in Ontario and your customer is located in BC, you would charge them 5% because that is the GST rate. They also have a PST that's beyond the scope of this. It's a completely separate regime. It has nothing to do with GST, HST. But so you want to make sure that you are charging the correct rate based on the province in which the customer is located. And secondly, as mentioned earlier, you want to make sure that you remit your sales taxes on time because there's steep penalties for not submitting your GST, HST. So you want to definitely file and pay your taxes. And again, as mentioned, if you cannot file on time, at least make an installment payment towards your taxes by the deadline to avoid, to reduce your interest and penalties. Okay, so I'm just going to talk quickly about my new course, my first course, for those of you who are registered for GST, HST, and who might need, a little bit of help, or they feel a little bit of stress, or they're not confident. And so in the course, I have I built it. So I've worked with hundreds of people over the years in setting up their GST and HST. So I built it to kind of sort of resonate with you in terms of the steps that you have to take. So first of all, it's a comprehensive course. It goes through every step of the process, when and how to register, how to know how much to charge. So I talk about the provincial rates, how to file your returns and claim your input tax credits, your taxes on expenses. I answer questions. I've created a template, a GST, HST, and QST template, so that you can track it, and it's very easy to use. At least I think it is. So that is something that comes with the course, plus an instructional video. And so again, I think this will help you know that you're doing things correctly, save time, save money. I have a section on the quick method, making sure that you maximize your input tax credits. It's fully self-paced. As soon as you have enroll, you get access to the full course. You can go through it section by section, or you can just go to the sections that you need reference to. Every section has a fast facts, which means that it summarizes each section. So again, you don't have to watch the whole video if you don't want to. And then for the sections that are how to register, and how to file your return, there are step-by-step guides as well. So and there's also a section that's just for Quebec for business, because there's separate rules for businesses that are located in Quebec. So I have a whole section dedicated to that. So this is ideal for freelancers, solopreneurs, small business owners who have relatively straightforward tax obligations. If it's slightly more complicated, if you're not for profit, if you are a financial institution, charity, etc., and construction, this course might not, because it doesn't really deal with specific cases, but it is great for just someone who has a relatively straightforward small business. And so there is a promotional price. It's $97 now, and until January 15th. And as soon as you enroll, you get access to all the materials. And most importantly, I think you can ask me questions. I may not have covered everything. You may have questions that are specific to your business. So there's a section after each lesson where you can indicate your questions, or you can always email me with your questions. So it gives you access to sort of understand that. Okay, so I got some specific questions from some of you, and so let's go over those. So the first question is, what is the best way to stay organized? And so I mentioned this before, and in this case, Roxanne uses iCloud to organize her receipts. And so I think what the best way to do this is, again, to set up an accounting folder on your computer. You can tag your specific transactions. So it's a great way to really query your transactions. But also, you can put everything by year, and as I mentioned, alphabetically, whatever. It's also a good time to consider going paperless, right? So you're going to also have receipts and bills and invoices that you receive physically. So you should scan those and save those in the folder. And both Revenue Quebec and Revenue Canada accept electronic documents. Alternatively, as long as they're a good, clean scan in your folder, you can always print them if you're ever audited. And if you're using accounting software, you can actually attach the whatever the source documents, receipts, bills, contracts, bank statements, all of that directly to the transaction in accounting software. So one other reason to use it, not necessary for everybody. And again, if you only have a handful of transactions, it's not really a big deal. The next question is how to calculate and report taxes on income. So if you have interest from your savings account or a GIC, and it is in a non-registered account, which means not a TFSA, not an FHSA, or not an RSP, you will get a tax slip. This will be a T5, and if you're in Quebec, an RL3. And you would simply report this on your tax return. There's a specific section called interest income or dividend income, depending on what you receive. And if you are using tax software, it makes this really easy, actually, because they take you through an interview process. They'll say, do you have a T5? You'll say yes. You can actually download your data directly from Revenue Canada if you were signed up for CRA My Account. So this is, again, you're doing your tax return can be a breeze. The government has made it very easy to do that. Okay, so the next question, it relates to deductible expenses for healthcare professionals. And so if you're a healthcare professional, again, you want to look at the expenses that relate specifically to your business and also the general expenses. So if you have a home office, you can absolutely deduct that. In this case, this person drives to their clients, so they can absolutely deduct the expenses that relate to their car. And as mentioned, if you're a sole proprietorship, you have to track all of those expenses and take the percentage of business travel over your total travel for the year. If you're a corporation, you can use the other methods that I mentioned. It's very, very important to track your mileage. There are automobile logs. They're available all over the internet. They're very easy to find. So if you just type in auto log into Google, you can find downloadable spreadsheets, and that way you can just use those to track your miles. You want to make sure that you keep track of the date of the travel, the business purposes of the travel, the number of kilometers that you drove. And so that may be, and this is a heavily audited area by CRA, so it's really important to keep this information. Another question from Gabrielle was, can schooling be tax deductible if you have a sole proprietorship? So yes, training is absolutely tax deductible if you are taking a course, a short course, or some kind of a training that relates very specifically to your business. And this is important. The length of the course is important, and that it has a direct business relationship. If you were taking sort of a longer program, it might be deductible, but it is not fully tax deductible. Instead, you have to capitalize it. You put it in the CCA section, and you basically depreciate it over time. So again, yes, training is deductible if it relates to your business. The next question, what are the vital elements of a good bookkeeping spreadsheet? Great question. So if you are using an accounting software and you, so if you're using, sorry, if you're using an accounting spreadsheet, these are the elements that you want in your accounting spreadsheet. You want the date of the transaction. You want the name of the customer or the supplier. You should have two tabs, one for your sales, one for your expenses, and actually a third tab for your home office expenses. So you want, like I said, the date, the customer or the supplier. You want a description of the transaction, the category to which it belongs. Sales are generally sales. You can also put, like services or consulting or whatever. It's not that important, but for tax return purposes on your expenses, you want to assign it to a category. If you look up the T2125 on Google, you can see the categories that are available for the tax return. And you could use one of those categories. There's also an other category. You can put in some details there. So if you have a lot of an other type of transaction, you can also use that. But you would want to try and fit them into one of the categories for tax return purposes. Look, if you have a more complex setup, if you have accounting software, then you might want to expand your categories. But for simple businesses, you would just want to use that. So you have categories, and then you would have the net amount before taxes if you're registered for GST, HST, QST. And then you want to have a tab for GST, HST, another tab for QST if you're registered in Quebec, and then a total amount, and then how you received payments, right? So it could be, or how you made payment. It could be your credit card, it could be to your bank account, it could be to your savings account. So all of that. And so I just want to make one other point. And so this is a question that comes up frequently. It's very important to save for taxes if you are a small business owner, because first of all, it can be a bit of a shock when you see your tax bill, especially in year one. So first of all, you want to estimate your taxes. There's a tax calculator. It's called the Simple Tax Calculator from Wealthsimple, and it's great. And you just put in the amount that you expect to earn for the year and see how much approximately that you will owe in taxes. And then you want to take that and create a savings account and put that aside. And you should also put aside your GST and HST and QST that you have collected from your customers, so you don't spend that, because it's not really your money to spend. You're just collecting it on behalf of the government. Okay, so now I'm going to take a look at the questions from the chat. Kara. So as a new independent travel agent with a hosted company, what can I claim as personal travel? Is it one trip per year? Okay, so Kara, if you are a small business, like if you're independent, which it sounds like you are, you can, as a business expense, you can absolutely claim the travel that you take for business purposes, right? So the only limit that exists is for conferences. You're allowed up to a maximum of 2 conferences per year. But beyond that, if your travel is to go, for example, to meet with clients or some other purposes, then you can claim that business travel. And now, as I said, as I mentioned before, if you were traveling and 30% of the trip, 3 out of the 10 days, relates to a personal reason, then you would only take 70% of your transportation, of your airfare and your accommodation expenses, for example. So I hope that answers. It's not, again, as an agent, there may be some specific stuff, but from CRA's perspective, and this also applies to the healthcare professionals, to whatever industry that you're in, These are legitimate business expenses that relate to your business. Okay, so from Leah, so what's considered high? So that's very specific, right? And it's hard to know, but it depends, right? So if you're business, so let's just say you have $30,000 of income in the year. If you have a couple of $1,000s of, say, meals expenses, this is an extreme example, there's a good chance you'll get audited because it seems high, and it may all be legitimate, right? You would have to produce receipts and whatever. So you just, again, it depends on every business. Some people have revenues of $200,000, and then maybe $5,000 or $10,000 of meals expenses is is fine. It's not going to draw their attention. So I'm not really sure how it works, but if you have a few $100s in a category, CRA uses what's called a risk-based approach. And this means that they're not going to, generally speaking, they might, but generally speaking, they're not going to come and audit you for a few $100s because it would cost them more to actually do the audit. But again, look, everything that you claim should be business related and supportable by receipts. Okay, so Kara's next question. Yes, so the $30,000 in sales would be your commissions because that's what you receive. And so that is what you are reflecting on your profit and loss statement. You were, I assume, getting a commission check. And so once you get to that $30,000, you would have to register. In this case, though, Kara, I would say there may be best practices for travel agents. So it's useful to talk to your colleagues, people in your industry, as to what they are doing. Okay, MJ. Hi, Veronica. I went on a 100% business trip to the USA for training. Are the meals of your only? This will be items. Okay, so meals on a trip are a little tricky because they're not really so they're not really deductible. Like they're only deductible. The same rules apply unless you're going to a conference, and there are specific rules for conferences where you can claim a certain amount every year. If you look up conference meals, you'll see that. But other than that, the meals on a trip are subject to the same rules, which there has to be a business purpose. And the logic behind this is a regular person can't deduct their meals while they're traveling, right? So that's why, right, you have to eat. And so unless there's a business purpose, generally speaking, you cannot deduct travel meals. To my understanding, leasing machinery and vehicles seems to be for tax deductions. There's CCA maintenance. And what about financing? So, okay, so leasing costs, generally speaking, can be deducted, although there are specific gap rules, which that's a little complicated. If there's a lease to buy option at the end, and there's certain criteria, then you might actually have to show it as a financing anyway. But with a financing is different because you're simply, you buy the vehicle outright and you're paying down a loan. It's, in a sense, two separate transactions. So the vehicle or whatever equipment that you purchase has to be depreciated in the same way as if you simply bought it outright. So hopefully this answers your question. Just let me know. Okay, so MJ asked, if I pay something with a personal credit card, should the corporation reimburse me for 100% of the expenses via an expense report? And then I treat that expense according to the CCA rules. Yes, yeah. So if you have a business-related expense that is that you pay with your credit card, then absolutely you can be reimbursed from the corporation. You still make sure that you keep the receipts and the bills. So the corporation should have access to these in case the CRA ever audits you. And you would absolutely deduct the expense. So you would basically reflect it as an expense on your profit and and loss statement. So hopefully that answers that. Yeah, so Leah, I mean, and again, a good question. And often I would say it's relative to your revenues, not always. And again, if they're business related expenses, you can have $20,000 of an expense because you're investing in your business at the startup and they may audit you, but you're like, well, these are all the receipts, right? This, I spent this, this absolutely relates to business. But like there's soft expenses, and some of the soft expenses are meals, right? Travel expenses are soft expenses. Your home office, you don't want to take too much. Like, and again, if you're using 30% of your home for your home office, and maybe you deduct it, but that's a high percentage, and that might raise eyebrows. So again, it's expense specific, and I know, I'm not giving you. It's very hard to give a specific number because they also look at your bottom line, right? So if you're showing losses every year, there's a very, very good chance that you will get audited. Or if you're showing very little profit, again, there's a good chance that you will get audited. But on the other side, if it's only a few $100s of meals or travel or training, then you might not, right? Because it's just not worth their time. So hopefully that helps. All right. So, are there any other questions? I don't see any other questions. Um, well, I just wanted to say thank you again. It was a pleasure talking to all of you. If any questions do come up, you can certainly email me. And I will put some links, a couple of links up on this live stream, which you can oh, I see a couple of other questions. MJ, yes, this will be available on my YouTube channel at the same link. So you can just click on it and see it there. I'll also, my newsletter is coming out this Friday, so I will send it out with that, along with a couple of resources. And if anyone wants a slide presentation, they can just email me or my newsletter and I can send it to them, or I'll just set up a separate download page for that if enough people are interested. Thank you, Leah. I appreciate that. Okay, Nazari, if an incorporation purchases a used machine, expensive equipment, or a vehicle that has been CCA. No, yes, absolutely. So again, it's irrelevant what the previous person has done in the CCA. All that matters for your purposes, say you buy a used machine for $5,000. That is your cost. You absolutely have to depreciate it. You would put it into class 8 or whatever class is appropriate for that equipment and start depreciating it based on that. So depreciation essentially applies to whatever your purchase or price is, whether it's used or new. And yes, yeah, MJ, it's again available on my YouTube channel. So it will just be available to watch like any other YouTube video. Okay, so I think that's it. So as mentioned, from my newsletter on Friday, I'll send out some resources that might be helpful. And if you have any questions, please let me know. And thank you for being here. I really appreciate it. And have a great evening. Bye.